Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Nikkei though, that's up close to under 0.1%. The Kospi as well was trading with some good gains of around 0.2 around 0.3%.
MSCI Emerging Markets Index is down about 30%. So I can agree that there is concern about these markets and what's happening.
Market is firmly sell on rally, and the 20 DMA is now your stop loss, which is around 10,750. That's your sacrosanct stop loss.
Bandwidth of the corporate banks is not that much, and what is certainly not helping is this series of chart sheeting.
Interior part, there will be only scattered to isolated vehicles. There may not be much activity over Maharashtra.
Domestic institutions will also, and private sector banks may also come in and participate in this.
Markets are starting only slightly on the back foot. It's a flat start, 5 points down on the Nifty and about 19 down on the Sensex.
Generally, there are signs of a pickup. Obviously, in India and for the FMCG sector, rural is critical.
We are off the day's high as well. We had reached the high of 10,713, currently trading at around 10,680 mark.
Close for you. The breadth is absolutely even, Stephen. One stock up for every one stock that's down. That's been the kind of market breadth that we've had today.
Market recovers from opening lows thanks to a rise in European markets. Nifty ends just a tad below 10,700, while the Sensex gains 100 points.
A short covering bounce sparks Midcap Outperformance. Graphite India, Fortis Healthcare, Kiri Industries lead the rally.
Nifty PSU Bank ends the day in the red after Sunil Mehta panel's five-pronged strategy to tackle stressed assets fails to pump up bank stocks. IDBI Bank is the biggest casualty, losing 6%.
Nifty Pharma is the top sectoral gainer as defensives hog the limelight. Aurobindo Pharma, Divi's, Cipla top the charts. All stocks gain over 3%.
Auto and IT stocks also shine in trade. Auto stocks perk up after strong sales numbers for June, while IT stocks rally courtesy the falling rupee. Well, those were the top 5 headlines from the day's action on Dalal Street. Hello and welcome to Markets Today Talkback, the show where we tell you all that is interesting about the 8 hours of trading that happens in a day in just 5 headlines. I'm Lata Venkatesh, with me my colleague Prashant Nair. Hi Prashant.
Hi Lata. Over the next 30 minutes, as you said, we will talk about the top 5 market stories, headlines which dominated trade. Our experts will answer the questions that you send our way every day. IIFL Sanjeev Bhasin and technical expert Mitesh Thakkar are our guests, and both of them will tackle the questions in just a bit. But before we get to the questions, as always, let's quickly wrap up what happened as far as the day's trading action is concerned. Pretty dramatic and largely following global cues, global trade, especially what was happening in Asia. Lata.
Oh, absolutely. There was enough to keep us a little under the weather because yesterday was not a very good trading day for Indian stocks. But in fact, we started badly with the yuan actually depreciating to 6.7. And usually when the yuan depreciates, it's a bad day for Indian stocks and generally emerging markets. But the yuan got talked up by 2 executives of the People's Bank of China who said that they won't let the yuan slip. Again, in European trade as well, Germany's Angela Merkel won some peace with anti-immigration lobbies by agreeing to some asylum centers for immigrants. Because of both these reasons, the global markets, whether it was Asia or Europe, were chirpy, and that helped pull up the Nifty from the day's lows. But there wasn't much conviction in the recovery. In the first place, the banks didn't participate. And you can't have, one big 40% of the market walking in one direction while the general market walks in another direction. It was very clear that despite what was a grandiose asset sale plan, the PSU banks, investors and traders remained unconvinced. The mid-cap rally was big. It was 0.9%. But again, most traders we spoke to sounded skeptical and looked more likely to sell into the rally rather than build positions. But of course, we will have to wait and see. What did you make of the stock-wise positions?
I mean, Lata, as you pointed out, as always, we look at the sectoral action. And what stood out there was pharmaceuticals, auto, energy. That was the pack where we saw the maximum action. And pharma by far, I'll get to the stocks. Cipla, look at that. Aurobindo, Sun Pharma, Lupin, Dr. Reddy's. And except Aurobindo, I mean, all of the four of the rest are pretty large names. The biggest, actually, Aurobindo is also a large pharma company and big gains. Other gainers, Maruti, Infosys and ONGC also stood out. The laggards, there was Bharti Infratel, ICICI Bank. It recovered from the lows, but still was lower. And HDFC Limited was the other one, which was down about 1%. Broader markets, I mean, so much sort of carnage we've seen. So there were rebounds which were sharp. Just Dial, 7, Tata Global. So Tata Global, Tata Coffee, both were up quite significantly, 6.25%. And Tata Coffee about 13%. Tata Chemicals was also up, but it was up just 1.5%. Then there was Graphite India and HEG, both I think limit up. Fortis was higher. We've been reporting on that story. United Breweries, the beer company, UBL, big gains. Kiri was up 20% on 1 million plus volumes. Dilip Bilcon, after many days of falling, it's seen an uptick. It was actually limit up at one point, but ended just off the 5% mark. Ajanta, MCX and Bandhan Bank were the other decent gainers on decent volumes. On the downside, names like Vedanta, although there is no actual impact of what is happening in UK, the delisting, etc. on the company here, but industrial metals are weaker, 4% lower there. 8K Miles was down 19%, IDBI was down 6%, Avanti and KRBL were the other sort of big losers that we saw. Lata.
Yeah, I mean, midcaps remain jittery, no two ways about that. A large part of it, though, of course, you saw these graphite twins and chemical stocks, agri stocks doing very well. But let's ask our guests what they made of the markets. First up, to you, Mitesh, how convincing is the Nifty's recovery to you, and good to take long positions, you would say?
Lata, I think the Nifty still doesn't convince me in the sense that we still won't be trading index aggressively. But what is good is that since we are getting support at lower levels, if you could identify sectors which are doing better and in outperformance more, and if you see some buy signals over there, I think that could be good long side trade where you can be slightly more aggressive. And I've been saying this much because of the pharma index. The pharma index for the last 8 days has been taking support on the 200 average. That is, the intraday low is close to the 200 average. And today I think it appears to give a very strong buy signal on the intraday charts. So maybe while the Nifty may not do much, sector-specific moves could happen, and I think pharma could be once again coming back into focus after 2-3 weeks of sideways consolidation.
Okay, we will have occasion to ask you pharma stocks later in the show.
Oh, absolutely. I mean, so the second headline, a short covering led bounce sparked a big mid-cap move. So as we have been highlighting, Graphite India, HEG, Fortis Healthcare, Kiri Industries. Kiri, by the way, we spoke with the management earlier in the day as well. They all were looking super strong. We've got a couple of questions now from that particular pack. So Twitter user Pratik Agarwal is holding shares of Tata Global and Tata Coffee for the last 5 years. He basically wants to know which should he hold or sell. Remember the story that my colleague Nisha essentially reported on late last October, and it's been followed up by other publications today, and I think that sparked this rally, was that the consumer business, including the salt business, will be demerged out of Tata Coffee and it will be merged into Tata Consumer. We reported it many months ago. Let's take this question to our guests. Mitesh, actually Sanjeev, why don't you come in on this? Your thoughts on both stocks actually corrected quite a bit from the highs, but we saw this move, I guess, on news. But what's your sense?
Yeah, so, both the stocks, particularly Tata Global, has been a huge outperformer last year. And now it's been in the eye of the storm after the Starbucks episode globally and some sort of weakness which crept in locally. The numbers for Starbucks turned positive on an EBITDA level, and we think the other brands are doing excellently well. If this thing of, hiving off both the divisions on the consumer side becomes a reality, then that could be huge value unlocking, because they carry a lot of other subsidiaries which are, going to be subject to a global wallet. So I would say stay put. These are quality names. The Tata Group has proven their, overall growth in all these sectors, and I think that consumption is going to be a key going forward. So I would say stay put with both. You could actually realize higher gains over a period of time.
Okay. But if that Twitter guy wants a choice, then Mitesh, chartically, which is the one?
Very honest, Lata, very difficult to compare chartically, but I still believe that Tata Global looks excellent bet. I think that, once this correction, which has been there for the last 6 months, is now very close to getting over. Once we see the stock get past this 285, 290 zone, I think it should resume medium-term uptrend again, and 350 plus could be the target over here. So I would possibly place my bets upon Tata Group.
Fair enough. With that, we come to the third headline of the day. Nifty PSU Bank ends the day in the red after the Sunil Mehta panel's five-pronged strategy to tackle stressed assets fails to pump up bank stocks. IDB Bank's the biggest casualty, losing 6% in trade. Yesterday, the panel recommended setting up an asset management company or companies for loans above 500 crore rupees with money raised through alternative investment funds. We caught up with the men himself, if you please, Sunil Mehta and PS Jayakumar, the managing director and CEO of Bank of Baroda, who was also a key member of the Sunil Mehta panel. Listen to what they had to say.
Private equity investors or large institutional investors. So they have shown interest in this, and that encouraged us to sort of go ahead with this recommendation. So I am quite hopeful that this, as we sort of move down this line, that the domestic or international private equity investors will join in. And in any case, it is not intended that it should be completely funded by global investors. So there will be domestic participation. It's not sort of that we are dependent on the public sector bank. So domestic institutions will also, and private sector banks may also come in and participate in this.
As far as the AMC is concerned, there is absolutely no government involvement of any sorts. Now we're talking about a fairly small size capital for the AMC. So the sense is, I mean, therefore it should not be difficult to raise the fund. I think the larger question is the talent pool in the AMC and getting them, and getting quickly a quality team in place that can then help and roll out this process. I think that's a larger challenge than setting up the AMC or raising the 20 crores of capital or 10 crores of capital, whatever that initial number be. There are a set of extant rules on participation in AIF, and within the context and within the risk appetite, Bank of Baroda will certainly participate. As I said, it's an open architecture. There will be participation by this particular AIF as well as with others. We will take it as it comes.
Okay, we've got questions now about, on a PSU bank. Bank of Baroda viewer Kannan wants to invest 1 lakh rupees in Bank of Baroda shares for the short term. I mean, Bank of Baroda has lost about 30% just this year. He wants to know, when do you think is the right time to actually do it, make that decision? Sanjeev, what would you tell him? Is it a good decision?
Well, yes, I think the worst is priced in. Bond yields at 8%, rupee at 69, and you've got most of the asset quality getting priced in. But you know, Bank of Baroda has a very good leadership team under Mr. Jayakumar and you know, the new CEO, Mr. Ravi Venkatesh. And I think they've you know, cleansed a lot of the book. So if you have a little wherewithal, give it 6-9 months, I think you could be sitting on a good upside on Bank of Baroda. I would be relatively bullish around these levels.
Okay. Well, chartically, it looks like the lowest price. I think it's a 52-week low. Is this a falling knife to catch, Mitesh?
So, I think, you know, given the fact that the stock has been continuously making lower highs and lower lows, I don't think it is still an investment bet. But yeah, they've been oversold, they've been falling quite a bit. So I think the best we can hope is for trading rallies. I would still advise against investing into Bank of Baroda, but you can always get into trading positions when you get some kind of short to medium term buy signals.
Fair point. All right, we have to take a break on that note, but do stay on. We have our experts with us and they will continue to answer your questions. Also listen in to another very interesting person we had on the channel today, the former HUL chairman, Harish Manwani. He has not given a television interview in the last 10 years and has valuable you know, things to narrate about HUL. Listen in, we are back in a jiffy.
We still believe that our portfolio strategy of ensuring that we continue to premiumize some of our offerings, even as we continue to be relevant at the mass end and the middle end, is equally important. Big trend that we are seeing, of course, here is this whole digitization and technology. And I think we have been therefore proactive in terms of ensuring that the way we market our brands or the way we distribute our brands uses some of the best technologies to be relevant to the consumers of tomorrow.
Okay, welcome back. You're with us here on Markets Today Talk Back. We've been answering your questions. We've run through 3 of the 5 headlines which we put out every day, which define basically what happened during the course of the 8 hours of market trading. So here's the 4th headline. Nifty Pharma was the top sectoral gainer in trade today. The index was up 2% as traders took defensive positions in those stocks. Aurobindo, Divi's Laboratories, Cipla, I mean actually all large pharma stocks did very well. And they were up anything between 3 and 5%. We spoke with Pankaj Tibrewala of Kotak Mutual Fund, and he seems to be buying pharma stocks. He likes the sector. Listen in.
We have added few names to the pharma segment at various portfolios. However, I think one thing we need to acknowledge is that the industry structure has gone through a major shift. There's a major consolidation which has taken on the front end of the US generic industry, and hence you need to take a very stock specific approach to the pharma sector. We are focused more on the domestic pharma companies because we believe it's a quasi FMCG play, and some of the names are finding its way into our portfolio. However, on the generic side, we are being very, very stock specific because we believe that price erosion has still not ended.
All right, so pharma stocks, clearly the toast of the day. We have some questions. A viewer, Sanjeev, is holding 500 shares of Cipla, which he purchased at 586 rupees. He says he's a long-term investor and he wants to know whether he should hold or sell. Long-term investor, 586. So what was your call, Sanjeev? Cipla?
Well, I would say stay put. It's been a relative outperformer in the pharma sector, and lot of FDA issues overseas. Also, the Seriflow inhaler is now seeing a lot of traction in Europe, and that would be that would be the icing on the cake. The local business is doing extremely well, and we think Cipla is a must in any portfolio. So I think he's in a reasonable price. I would say over a year he could look for targets closer to 725 to 750.
In the money, more importantly.
Okay, so here's the 5th and the last headline of the day. Auto and IT stocks were the other pillar of strengths. Auto stocks went for the bulls after strong sales numbers for the month of June. Tata Motors, Bajaj Auto, Ashok Leyland all helped the Nifty Auto end the day in the green. While IT wasn't far behind, it also rallied courtesy of the falling rupee. Nifty IT ended the day in green, led by Infosys, HCL Tech and even Midcap stocks like Mindtree. We've got questions.
Yes, sir. I think plenty of them, because it's only pharma and IT which is giving people some long space. Twitter user Rakesh wants to invest 5 lakh rupees in either M&M or Escorts. Okay, looks like he likes tractors. And he wants to know which one he should prefer. He's a 5-year investor. 5 lakhs for 5 years. Sanjeev, help him. And also maybe you want to put in a word of advice on whether he should only restrict his choice to M&M and Escorts.
Yeah, so I think if we made a basket of stocks, you have tractor plays, you have SUVs, but please add a Maruti because that has declined, and also some of the auto two-wheelers. Bajaj Auto and Hero Moto have come out with excellent numbers, and they also give you a variance on the local and the subcontinent business. So definitely what he has picked up is the cream of the town or the best sector to be in on the consumption side. And I would say pick up a basket of all 4-5 large names, which include two-wheeler, four-wheeler and the auto play and the tractor plays.
Okay. Well, since it's a 5-year play, I'm not taking this question to Mitesh. But Mitesh, here's one coming for you.
Rajkumar has 990 shares of Tata Motors. His cost is 363 rupees. He's been holding the stock for the last 6 months. He's a long-term investor, wants to know whether he should hold or sell. Again, Mitesh, I mean, you want to take this? Tata Motors at 363.
Yeah, Prashant, I think the key here is that it's now come down to levels where the long-term bottoms could be seen on historical charts. So I think this is not the level to exit, though I would be against investing into Tata Motors because the long-term charts still aren't showing promise, but this is not the level. I believe that once we see some consolidation on this 260, 275 zone, the stock should reverse and possibly head towards levels of around 330 to begin with, and maybe even 365. So he might just get his price back, but I don't expect it to turn the longer term trend as yet on the upside. So as of now, hold, but I think try to exit as it stock gets closer to your holding price over the next 5 to 6 months.
Would signal a reverse to you? Because I mean, we've discussed this over the last few days. It's essentially touched that Feb 2016 level, and it's bounced. I mean, that was 265. It's about 270. What would signal a turn for you?
Mitesh.
Mitesh.
Yeah, Prashant. So I think, it's on the longer term charts, there's hardly any bounce. So I think, so the first scene should be some higher tops and higher lows being made, at least on the daily and the weekly charts. And that itself could see the stock head towards 360. And I don't think the monthly charts are yet signaling any significant uptrend. So I think best to exit as the stock bounces back from these levels and comes closer to its price.
Okay. Fair enough, but we perennially have this bull and bear discussion on Tata Motors, and several people have called it a bull at several points, or say it's a turning point. What would you say now, Sanjeev?
Yeah, so Lata, I mean, we've been advocating to buy that stock. It's corrected 15-20% from there. But, it arguably becomes the cheapest stock available globally on the auto space. The local CV numbers are showing you a lot of strength. The Slovakia unit production goes on stream from September. You would start to see, incremental growth over there. And we think that Europe, after this teething and toothing of the euro, should be a very, very fine spot going into the next 6 months. So I would, stick my neck out and say that 265, 270 could be a very lucrative time to buy Tata Motor with a 1-year view.
Fair enough. And now we come to the last question of the day, which is on IT stocks. Yakub Sheikh is holding 168 shares of TCS. His purchase price is 2192 rupees. He wants, I think he's been holding it for 3 years. He wants to know whether he should continue holding it. Well, first, Mitesh?
I think, Lata, this 2190 was before the stock became half due to this bonus adjustment. So I think he's holding it about 1,000 or 1,100 kind of zones. I think continue to hold. I still believe that the longer term charts promise more upsides over here. I think the buyback price of around 2,100, is also some kind of extension price target on the upside for the next few months to come by. I wouldn't be really worried. I would continue holding this one. And if he wants a stop loss to trail, I think anything below 1,700 should be considered as your ideal stop loss, though I suspect it may not be hit.
All right, gentlemen, thank you very much for joining in and giving us your take on all the stocks and answering viewer questions. With that, we wrap up this edition of Markets Today Talkback. Thanks for watching.